Hi everyone, welcome and thank you for joining us today. My name is Chloe and I'm the coordinator of events at Connecting Up and TechSoup New Zealand. For those of you who haven't attended a webinar session with us before, Connecting Up is part of Info Exchange Group. And Info Exchange is a not-for-profit social enterprise that has delivered technology for social justice for over 25 years. With over 100 staff across Australia and New Zealand, we tackle the biggest social challenges through the smart and creative use of technology. Now, I'd like to welcome you all to Building Budgets Brick by Brick today with Mick Devine, who you can see on your screen there. He's the CEO of Calxa, a leading budgeting, cash flow forecasting and reporting tool that helps save time and provides you the business insights you need to make the right decisions for your organisation or your not-for-profit. Now, before we begin today, we'll start with just a little bit of housekeeping. All lines are muted, so if you have any technical issues, please type them in to your questions box, which is on your GoToWebinar control panel, and I'll be able to assist you. And if you have any questions during the session, please also type it into the questions box and we'll address those during the session and at the end today during a Q&A with Mick as well. And please note that your comments and questions will not appear to the entire group. Now, if you're on a Wi-Fi connection and have multiple programs open, this can sometimes affect the quality of your audio and video today. So if possible, please close all other programs and your internet tabs to help you have the best experience. Please note the webinar is being recorded today and a link to the recording and slides will be sent to you as soon as the webinar ends today. And before we start, I'd like to remind you that there will be a short survey at the end of the webinar, so please stick around to complete that and leave us with your feedback as well. So that's all from me. I'll pass it over to Mick to get things started today, and thank you very much. I hope you enjoy your session.
Thank you, Chloe. Welcome everybody. So let's have a talk about budgets and what we're going to do. You know, all of us have to do budgets at one point or another, and I guess there's two main ways of creating budgets. There's taking the top-down approach where you do something simple like take last year's budgets and add a percentage to them, or there's the what used to be called the zero-based budget approach. And back in the olden days when I studied accounting, people used to talk about, you know, counting how many paper clips you would use in your office and that sort of stuff. But it's that concept where rather than starting from what you spent last year and using that as the basis for this year's budget, you start from what you actually need to provide the service that you're providing or produce the goods that you're producing. So you start from the different components and add them up and generate your budget that way. And I think there's a point where those two intersect, and there's times when it makes sense to do one way and times when it makes sense to do it the other way. And you know, as with most things in life, there's compromises, there's different ways of doing things, and different, you know, times when it's right to choose one way rather than the other. So we'll look at that and sort of explore some of those options. I'll be using Calxa to do examples here, but the principles of what we're talking about will be applicable however you do your budgets. So bear with me on that, and we'll look through. First, we'll start with the idea of top-down budgets, and really the simplest way of doing those is to take your accounting system data, the actuals from the current year, and project that forward to next year's budget. So maybe if we can do a quick poll first, Chloe, please. And if everybody can just tell us what accounting system they're using, that'll give me some ideas on some of the examples I should use. So
Yep, so that poll's
Yeah,
just up there now. If people would like to respond, we'll give people about 20 seconds or so. Okay, and
so
there are
how do
your
we go there?
results. Got 62% said they use MyOb, 23% say they use Xero, and 0% QuickBooks, and 15% said something else.
Okay, right. So in terms of Calxa, the examples here will be directly relevant to 85% of you that use MyOb and Xero. The others who use something else, we can't do anything for you in Calxa yet, but we can in the near future. In the next month or so, we'll have an option for people who use some other accounting system. But talk to me about that offline if that's of interest to you. But let's have a look how we would do a top-down budget in Calxa. And so in my reporting tools, it's logged me out. Just a moment. Just got to wait for this to refresh. I left it too long since I signed in, sorry. Maybe I'll keep talking in the meantime while I do that. So no, I haven't got a slide there. Just a moment. I've got slight technical difficulty signing in here. It's part of the security on the system that it signs you off after a bit of inactivity. But we're back on now. So under report tools, budgets and budget tools. We have a budget factory wizard, which really does that top-down budget creation simply and easily. So all we have to do is, let's do this at the business unit level. So business units could be tracking categories for those of you using Xero. They could be classes for those of you, there's no QuickBooks people, jobs for those of you, or categories for those of you using MYOB. And we can take actuals for 2020, and then we want to create our initial budget for 2021. And we can do multiple years if we want. And because we don't have a full year of actual data in Calxa yet, it takes actuals up to May and then our budget for the next month to get a complete year of data. And then it's very simple of doing a percentage increase for income, cost of sales, and then expenses as well. Now I'm going to do the percentage increase for income and cost of sales, and we're going to do our expenses brick by brick and do those from the bottom up, or some of them at least. But this will bring across the expenses that we have from last year into this year's budget or into next year's budget. So if I go to my initial budget now and go to next year, the other part of building up the budget is about building it from your different cost centers or business units upwards. So your different projects, programs, whatever you call them. So these would be tracking categories in Xero, they'd be jobs in MYOB, and we set the organization budget to be the consolidation of those. So that automatically adds is the total of all the different project budgets. And so there I've very quickly created that budget for, or the first draft of that budget for next year. And then you can go in and again, doing some very high level stuff. If I let's find one that's got a few more details in it. I can do things like, put a total in there and it will spread it evenly, or change existing totals proportionally. So different ways of creating that budget from the top down. So that's simple. It gives us a quick draft of next year, and it's quite easy to do. Yeah. Doing the budget from the bottom up is much more time consuming, and that's why a lot of people don't do it. It requires examining all the different components of what you do, and I think there's some areas where it makes more sense than others. Something like rent, there's not much to examine, unless you've got, you're an aged care place where you've got 50 different properties that you're renting out, and then you have got different costs for those. But for most people, there's one premises where you've got rent and it's on a fixed annual rent for the next 5 years or something. There's not much to look at or examine there. But then other things, and wages is probably the big one in the not-for-profit sector, because as a service industry, a lot of the budgeting is about budgeting for wages. I think it sometimes makes sense to really examine, what people do we need to provide this service, how many do we need, when do we need them, that sort of thing, and really look at the allocation of resources around that. So how do we do this in CalcSA? The short answer is we don't do much of it in CalcSA. We go back to our old friends, the spreadsheet. You can do an export from CalcSA, and so I can export this budget for, let's do 20 to 21. I can do it at the branch level, and I can choose a couple of different branches, or I could choose all of them, and I can choose to export the profit and loss or the balance sheet and go export budget, and it will create a spreadsheet with my current budget. And if I just show you that once it opens up, if I wait for it to actually finish downloading, it works better. And it's opened up on the other screen, but I'll just drag it across and show you. So it's, sorry, I'll try and get it to stay on this screen. So it's simple stuff. We've got our business unit, our account number, account name, and then the amounts that we've set from our top-down budget, which we can then review, revise. Now, when you import this budget back into CalcSA, you don't need to import everything. So I'm going to cheat now and use the one I prepared earlier, where I've deleted a whole bunch of lines and left in wages and salaries for a couple of jobs and some training and travel costs, and look at how we would then build that up. And we all have different ways of calculating wages and the staff costs, and it really depends on the structure of the organization. So I've got one example here where we've got full-time staff, and you can get as complex or as simple as you like on this, depending on how you are. So I've got 5 full-time staff. I've got an annual salary of 80,000 for them. Because I like my budgets to reflect what actually gets paid each month, I've worked out which months have got 2 pay periods, which have got 3, and then we've arranged a 5% pay rise starting in January, so we need to incorporate that into the budget. And then we've got super to incorporate as well. And so simple formula where we're multiplying the number of staff by the salary. And I like to name my ranges here, so I've called that one salary so that I can just easily copy it across. So it's just number of staff times salary, times divided by 26 to get the fortnights, times the number of pay periods in the month, and then multiplied by 1 plus the pay rise, which will give us 1 for here and 1.05 for there. And so then that just copied across. I do a check that it adds up to a reasonable total. So, 580s is 400, and I've got a 5% pay rise for half of that. So that's the extra 10,000. And then you can start, so I know I've got the logic of my calculation right. And then you can say, we need 6 people in January and February and March, and 7 for the rest of the year after that, because we're expecting to have more clients, greater services, whatever. And then the superannuation calculation is simply 9.5% of that. And I tend to do these calculations down here. Now, when I import this back into Calxa, I can have this section with all my workings down below, because the import will stop at the first blank row. So that will work quite fine. And if I want to calculate training staff per member, per staff member, I've named that training, and so it's just number of staff times, and again this times training. Did I do that right? And then copy that across, and that will give me a formula there. Now, I tend to do this formula down here in the workings, so that up here, the only thing I do is reference the workings down here, just so that I don't get confused by calculations up here. All these are simple references to the rows down below. Now, in this department here, we've got part-time staff and casual staff. So I've put those on a separate sheet where we've got the number of staff, average hours per fortnight, and hourly rates. And again, calculating the total amount of the wages there. So it's about looking at those different components. And then, you might also look at, is the work cover, and this will depend on what state you're in. In some states, the work cover is a direct percentage of your wages, in which case you can actually calculate it based on that. In other states, they have bands of work cover amounts based on bands of salaries, so it's a bit more complex to calculate. But you can bring in those things. You can, travel costs, again, similar sort of stuff. So if I call this travel, and maybe travel was going to be, you know, the travel amount again times the number of people, because maybe these are people who need to do a lot of time with face-to-face with clients. So let's do travel and accommodation is that much, and then copy that across. And then something like telephone and fax, it's just that's probably one where I would just do the top-down approach, build it up from last year, unless there's significant changes. You know, telephones, you know, in most organizations, not a major cost, you know, compared to things like wages. So, you know, I think you need to offset the amount of time and energy it takes to do the detailed budgeting with the value of it. You know, we could go looking through call records and phone plans and that sort of thing, and find potential savings there. But I think that's an exercise that's probably best done independently of the budget process. And, you know, it's just part of the annual, at some point during the year, you should go through and review the contracts, the subscriptions, the different admin costs that you have, just because that's good practice to do. But when it comes to setting the annual budget, taking something like telephone as based on last year, and probably a reduction on last year, because I'm finding that generally telephone costs are declining year by year, certainly for our business. And even though we're making far more calls than we did a year ago, 5 years ago, 10 years ago, we're paying less and less for telephone costs each year because we source them from different suppliers, that sort of stuff. So the idea is that you build up those details, and then, you know, there's 7 lines here, and I can save that, and then I can just import that into Calxa, is what I would do. And simple process of importing it, just to go and find that file. Don't look at the pictures on my computer. And bring that in. Now, while this is importing, I might just ask Chloe to present another poll, just asking how does everybody do their budgets at the moment? We've just got some different options there. If you could show that, please, Chloe.
Yep, that's up on the screen now.
Gives me a chance to have a glass of water while you drink, a mouthful of water while you're doing that as well.
Easy.
And are there any questions yet, Chloe? Sorry.
Yeah, we've got one question. I'll just
Yep.
launch the results of this poll first, and then
Yep.
I'll ask that question as well.
Mm-hmm.
So can you see those results there, Mick, or do you want me to read them out for
No,
you?
I can't see them. Should I be able to see
That's all
them?
right. All good. So in terms of how do you do your budgets now, 77% say they use a spreadsheet.
Yep.
And then we've got an equal 8% for all other options. So 8%
Yep.
say they use their accounting system,
Mm-hmm.
8% say they use Calxa, and 8%
Yep.
say they use somewhere else.
Yeah. Okay.
Hmm.
Okay.
So that's that one.
Thank you for that. Yeah.
We've also got a question when you're ready to deal with that as well.
Yes. Okay. What's the question?
I've got a question from Alison. She asks, can you export Excel spreadsheets into Calxa, and does Calxa work with Reckon?
Okay. You can import, you can import budgets into Calxa at the moment, but not actuals yet. but and we don't integrate directly with Reckon yet either. No, we're not going to integrate with Reckon, is the short answer. We used to many years ago when we had a desktop application, but since we moved to the cloud, that's been impossible to do. But what we are working on over the next couple of weeks is an option where you can bring in those actuals from a spreadsheet. So you'll be able to create your accounts in Calxa, create your accounts, create your business units in Calxa, import actuals from a spreadsheet, and use Calxa without a direct connection to the accounting system. Not quite as simple as having it directly done, but it does give you that whole set of reports, that budgeting system that we've got with the multiple versions of the budget and that sort of thing. And so that's the best option we'll have for you, Alison, and anybody else who's using something other than MYOB Xero and QuickBooks. So I've imported those budgets from my spreadsheet, and now if I go to budgets and actuals, and if I go down and find, I think this was one of them. Let's move to next year. If I just go down to the expense section here, I should find some wages. So those wages and superannuation, that's the ones from here, from my part-time staff. And so now they're fitting in with the structure of everything else. And then the other one I did, I have to remember which job it was now. It was the support local. And again, if we go down to the expense section, so you see, you know, the bank charges have come across from the budget factory where we did the, you know, take everything from last year, and so's the insurance and meeting expenses, fuel, that sort of thing. But I've now incorporated my wages, my superannuation from the spreadsheet. So if I just bring the spreadsheet across so you can just see at least a couple of those numbers together. So you, sorry, that's me messing up my screen there, moving it too high to the top. So you'll see that 3769 there is the same as what's there, and the 2923 for the superannuation. So we've got those budgets in. We've got, and then our telephone and fax charges where I put $1,000 each, the training and development, and the travel and accommodation, which was increasing as the number of staff increased later in the year. So what we're able to do is combine those two methods where we can do some stuff using the simple top-down, take last year's actuals, add a percentage, and create the budget. But then where it makes sense to look at more detail, and I think wages is probably the classic one from a not-for-profit perspective. It's, you know, it's a major cost, and it's worth looking at, you know, where do we allocate our resources best, and it's, you know, it's not necessarily about, you know, reducing those costs. It's about allocating to the right places. You know, how many clients are we servicing in this program? How many clients are we servicing in that program? How many people do we need? You know, you could work with, when you're looking at the number of staff there, you could work with ratios of staff to clients and that sort of thing so that you get the right numbers. You look at that, and then I think it's worth having that discussion about how does that sit with what we're already doing. And I think, I think sometimes those can be challenging discussions to have, because some people will feel threatened when you start talking about changing staff levels in one area compared to another. But if it's done right, you can improve the efficiency of the organization and allocate resources to where they're most useful. And I think that's the benefit of the bottom-up approach, because I think it is about validating that budget and saying, we've created this budget. The bulk of the expenses for this project is wages. We've validated that by looking at, how many people do we need for the clients that we're servicing. We've looked at the costs of those people. We've looked at how that all groups together. We've looked at the on costs like training and travel that goes with that. And these are the requirements. And I think especially if you're presenting a case to somebody for why a budget should be different to what it is now, having that detailed build up of the budget gives you a much more powerful argument as to why that budget should be different. And I think, rather than saying, well, we spent $100,000 last year, therefore we should spend $105,000 this year. It doesn't necessarily say much about the quality of the service that you're providing to the clients and that sort of thing. I mean, I think you can say, we spent $100,000 last year and we only just managed to scrape by and give the clients the fairly minimal service that we wanted to. If we had another 20,000, we could have had an extra 25% of staff and provided a better service to the client. So I think there is some of that arguments you can do, but I think the detailed bottom-up budget is the most powerful when it comes to justifying a budget and arguing why it should be a particular amount. And I think so. I think it's worth doing, A, for new projects, B, when you need to make significant changes. It may be that there's a pandemic happens and your whole business model needs to change, and instead of going out to see clients, you're doing a lot more stuff by telephone and Zoom and video conferencing and that sort of thing. So you need a different set of people to do those tasks, and the people who were doing face-to-face with clients, you maybe move them into a different project. But I think it enables you to review where those resources are best used, but it does take time. It's not something you can do in 5 minutes. It wants thinking about. It wants talking to people. It wants involving different people, and it's about getting those details right, because it's and I think when you do the bottom up one, it comes to a similar result to what the top down does. That validates that the top down one was pretty close, or what you did last year was pretty close anyway. But where it's wildly out, the first thing I would do is check my assumptions and how I've built my bottom up one, because there's always the possibility where you've made a mistake somewhere. And I've made mistakes with spreadsheets more than once in my life. But I think the times when the top-down approach makes most sense is when there aren't many changes. You know, if you've got the same grant funding for 3 years in a row, for example, then you know what that funding is, and you don't have to justify that funding again, because there's a contract there that says this is what you're going to get. Or if it is something like rent, where there's a 3-year, 5-year lease that's fixed, and then again, the small things, the bank charges, the audit fees, that don't change very much from year to year, and some of which you can't control very much anyway. The bank's going to charge you the bank fees. Yes, you could fiddle around and move money from one account to another and save $5 a year, but is it worth the effort of doing that? So it's the top-down approach is good for those consistent, easy things, but supplement it when you've got time by the bottom-up approach. And maybe it's, if you've got a series of ongoing projects that go on for year after year after year, you don't need to do the bottom-up approach every single year. The fact that you've gone through a rigorous process last year is probably good enough. If there's been no substantial change in the environment, to do that again, to just extend that for next year and the year after, and not worry about the details for a couple of years and focus on something else. Maybe you have you've got 20 projects and you do the detailed stuff on 4 of them every year. So every 5 years you get through the cycle of looking in detail at everything. I think it is about spending your time wisely and working out where you can best spend the resources of your organization, if that makes sense. Now, we got any more questions, Chloe?
Yeah, we do have a question
Yep.
from Anais. She asks, her bookkeeper uses MyOb for PC, and all of their organisation have Macs. So it's a bit hard to access data without asking for exports. Could
Yep.
Calxa integrate with our PC MyOb and be accessed from a Mac?
Yes is the short answer. The um, because Calcs is cloud-based, you can use it from a Mac or a PC or a Chromebook or an iPad, anything. The only requirement there is that your MYOB data that your bookkeeper's using is online, which most of them are these days. And it probably makes it easier for the bookkeeper if it's online as well, because then it's backed up by MYOB. The bookkeeper can access it from anywhere. So as long as the MYOB data is online, you can access, you can connect Calxa to it, and then you can run your reports. And one of the benefits of doing those reports in Calxa is that you get to do the management reporting in Calxa without having to interfere in the accounting system. And I've I've worked as an accountant and a bookkeeper in a previous lifetime, and you don't want anybody interfering in your accounting system, and you protect your accounting system and keep it close. But we have to recognize that people need to do reporting. So one of the benefits of using Calxa is that you can take that reporting outside the accounting system, but you're still reporting on the data that's in the accounting system, and you can create a workflow so it pulls the data out overnight, and so every morning you've got up-to-date data from whatever's in the accounting system. So I hope that answers that question. Anything else, Chloe?
No other questions at this stage.
Yeah,
If anyone has any other questions, please type them into your
yeah,
questions box in the webinar panel. Is there
yeah.
anything else you'd like to wrap up
Yeah,
with?
I just wanted to say we do have a donation program that we do through our friends at Connecting Up. So for small, medium, not-for-profit organisations with a turnover of less than $1 million, um, we donate CalCSA, and you just pay the small admin fee to Connecting Up. So have a look at that if you qualify for that. If you don't qualify for that, the Connecting Up can organise a discount for you as well. And there's a free trial on the CalCSA website, so you can check it out and ask us questions. But our
Wonderful.
goal is to make this budgeting process easier for you.
Yes, and you've certainly demonstrated that today. Thank you, Mick. And thank you very much for presenting today, and thank you everyone else for joining us today. I hope you've learned a lot from Mick's presentation and some demonstrations of how to build your budget, and that we answered all of your questions today. If you do have any other further questions, please don't hesitate to get in touch with us via events@connectingup.org.au. Just as a follow-up, Connecting Up and TechSoup New Zealand are also hosting a follow-up budgeting, cash flow and forecasting webinar on Thursday the 18th of June with 2Ps accountants. And that's called Future-Proofing Your Organisation, Budgeting During COVID-19. That's Pam from 2Ps. She's going to discuss what elements you need to consider when budgeting for the 2021 financial year, considering all of the government activities that are happening around grants for not-for-profits, but also, kind of environmental factors to take into consideration when budgeting. And also how to easily produce multiple budget versions, provide templates for budgeting and cash flow forecasting as well. And she'll be using CalCSA as part of that demonstration too. And this is a really practical session with anyone wanting some further help to get started with budgeting for 2021 as well. So please check out our events page on the Connecting Up or website if you're in Australia, or the TechSoup New Zealand website if you're in NZ for more information. Don't forget that the recording from today will be available on our website very shortly, and a link will be sent to you, so keep an eye out in your inbox. And again, thank you everyone for being with us today. I hope you enjoy the rest of your day. Please stay safe, have a lovely week, and we look forward to seeing you next time. And thank you, Mick. Enjoy the rest of your
You're
day, and
welcome.
we'll see you soon.
Yeah,
Thank you,
thanks
guys.
everybody.
Bye-bye.